Hello, what's up guys? I am Taufik Abiola. I'm a day trader. In today's video, I'm just going to be doing something really different. In this video, this video is just the root of price action. This video that I'm going to be doing is going to be part one, because in this video, I'll just explain the rule that I'll be using in other parts of this video series. But in this video now, what I'm going to be explaining in this video now is going to be a root for all the next video that I'm going to be doing, like 2, 3 or 4 videos that I'm going to be doing, depending how it takes. But today's now, I'm going to be explaining the rule. What I'm going to be explaining exactly and do in this video, that the root of this video is just the price action trading strategy, way of trading price action. In this video now, in this price action now, we are going to be using trend line to trade trend line, support and resistance, candle chart pattern, and candlestick. This is what I'm going to be using. But in today's video now, I'm going to be explaining the rule of this trend line. After understanding the rule of this trend line, I'm going to be moving forward in my next video, which I'm going to be doing top down analysis. And when doing this top down analysis, it is the rule that I explained in this video that we are going to use in that top down analysis. I'm going to be explained later on in my next video. So in today's video, what I'm going to be just explain is the rule of trend line. After the understanding of the rule of trend line in this video now, the next video that I'm going to be dropping is that I'm going to be going straight to the chart to do top down analysis from higher time frame down to 15 minutes time frame. And I am a day trader. I do my top down analysis from monthly time frame. Monthly time frame as the week open. I do from monthly to weekly, from weekly to daily, and from daily to 4 hour to 1 hour, and to 15 minutes time frame where I'm going to be executing my trade. So this video is going to be a very long video, so I will not do it in one long video now. I'm going to be doing it gradually and dropping it every week by week. So in today's video now, the rule of trend line and support and resistance, the rule to use is to trade it. If you understand it from this video, in my next video we are going to go to the chart and do my top down analysis from higher time frame down to 15 minutes time frame, so you can understand how price action really works. So without wasting much of our time, let's dive into the video. First of all, before I go in deeper to explain the rule of this trend line we are going to be using, first of all, what I will let you know is that what is this price action I'm talking about. Price action is just by looking out to the chart by your left side and do your top down analysis from historical data where the pair began. Like now, if you are to trade GBP USD have years that it began. You are going to go down, do your top down analysis, go to higher time frame, zoom your chart to do your historical top down analysis. If you do your top down analysis from this point now, you will do it gradually from higher time frame down to the time frame exactly you want to trade to spot your entry there. So like me now, I am a day trader. If I do my historical top down analysis, although historical top down analysis is not something that you are going to be doing every time, but if you are confused, or every week like me now, every week when I'm preparing for Monday to open, I will do my historical top down analysis, check everything in check. So every time I want to trade, I will just be doing my normal top down analysis from daily time frame down to 15 minutes time frame where I'm going to be trade. This important of price action trading strategy is that many people get it confused, but as I wanted to break this video into many parts, I'm going to be explaining everything to you in details, because as we do our top down analysis, let's say on monthly time frame, weekly time frame, daily time frame, 4 hour time frame, 1 hour time frame are saying selling. If you come down to 15 minutes time frame as I am now, or any time frame that you want to trade, if you come down to it, you will first locate your sell setup. After locating your sell setup, you will see some accumulation that this market might have a high chance to touch this point. That means you are going to be seeing some buy and you'll be analyzing some buy. That is what I'm going to be breaking down in this episode. So price action is just basically looking out to your historical chart where the chart began and began to be filter it down to lower time frame where you want to execute your trade. So let me now explain the rule of this trend line we are going to be using. Let me explain the rule in detail. So if you understand it, you are going to understand my next video where I'm going to be talking about top down analysis exactly. But in this video now, it is just the root of this top down analysis. Just explain the rule of this trading strategy in this video. We have many types of trend line, but the most common and most used one and popular one is trend line bounce and trend line break. And in this video now, I'm just going to be explaining it two types, which is type 1 is trend line bounce and type 2 is trend line break. So let me take you to the chart and explain trend line bounce for you, and we move forward to trend line breaks. Here on my chart, I've gotten a clean chart. Here is an example of trend line touch. I will now explain its rule. You can see for the trend line touch, we must have first touch, second touch, and the third touch. We are going to be executing our trade like this. Now, like this trend line, this is the trend line 2 that I mark out on my trading view chart. And you can see we have the first touch at this point and the second touch at this point. That means the candle, body of the candle or wick of the candle touches the trend line. We have the first touch at this point, second touch at this point, and the third touch that we are going to be executing our trade. You can see as we have dot touch at this point now, we will first detect this first touch and second touch and mark it out. And as we have the third touch, we are going to be executing our trade. set our stop loss, and be open for 1:2. For me, I basically use this strategy 1:2 all the time, because it's market will always, no matter any strategy you are using, market will surely give 1:2. So 1:2, take profit it. And normally we are expecting the fourth touch to break. That I'm going to be expecting the aspect of the breaks in the aspect of trend line breaks. So for the aspect of this trend line touch, now we are discussing. We have the first touch right here, second touch right here, we execute our trade. If you look at this point exactly now, you can see if I mark out at this sell at this top now, you will see that our fourth touch here has already confirmed it is definitely going to break. You can see our first touch right here, second touch at that point. You can see this is our first touch, second touch, and the third touch has occurred at this point. If you look at this point very well, normally this place have high chance of break, but most time fourth touch also used to bounce, but we are not going to be trading it because it can drop anytime. So as we have the even we can still scalp from this point, from this zone now, and set our stop loss and make some little profit at this point. You can see. And if it is about to touch this trend line, we are going to be up and out. We are not going to be trading it as 1:2. So if price touches this point, we are going to be knowing we are going to be once price touches this trend line, we are going to be execute our trade and be looking forward for the break rejection to execute the break sell. So this is for the trend line bounce. The rule behind this trend line bounce that we must have first touch, second touch, and the third touch. We are going to be executing our trade. Everything that we are going to be using trend line touch to trade is that we are going to detect if our first touch, second touch, and our third touch, we are going to be executing our trade. The only business we have with the trend line touch is just the third touch to execute our trade. For the trend line breaks require a lot more of knowledge, and it might look a little bit stressful if you did not know about this that I want to tell you. Normally, as we have first touch at this point, we have our first touch at this point, second touch at this point, third touch at this point. As I explained, we are expecting this fourth touch to break. Our fourth touch that is definitely going to come here, we are expecting this one to come and break it out. And once we spot a break, if it is a fourth touch, we have the first, second, and third. If it is a fourth touch, we are expecting it to break at this point exactly. And normally, if fourth touch breaks, fourth touch also give us an opportunity. Let's say it break at this point, we miss the entry. Fourth touch normally come to retest. That is how normal break. If normal break occur, normal break will surely come back to do a retest. So this is an example of fourth touch. Our all the time fourth touch must got break, but if it not got breaks, any touch except the third touch, we are expecting it to break. Any touch, let's say we have the first touch, second touch, and the third touch. If the fourth touch got break, we are going to be executing our trade from that point. And if sometimes the fourth touch might bounce back, we are not going to be trading it, but definitely fourth touch is going to break. From fourth touch upward, any break that we see, we are going to be executing our trade. But if like me now, if I see fourth touch did not got break, the fifth touch that got break, I'll wait for it to retest before I execute that trade. So to serve as confirmation. So sometimes this third touch that also bounce at this point usually got break sometimes. If this third touch got break, we are not going to be entering exactly. We are not going to be entering exactly at this first break where it breaks. We are not going to be entering exactly as we do on fourth touch. We are going to wait for this retest. If this retest occur, that is the point we are going to be entering. So that is how I trade third touch breaks. Let me now show you a sample of it. You can see on this chart right here, we have the first touch right here, second touch right here. You can see first touch, second touch. So as this third touch now, let's say I mark out this point now, I'm waiting. I will be waiting till this extent that this long candle now occur. So I'm waiting for the third touch to occur at this point for me to be looking forward to sell. As the third touch got break at this point, I will just it is two things that I'm going to be using to convert. You can see this is our recent resistance at this point. I will mark out this resistance. After marking out this resistance, now I'm now going to convert to line chart to show some retest, because line chart usually confirm the retest for us if you cannot read it from the candle directly. You can see as it come back to our resistance right now at this point, I'm going to be executing my trade and set my stop loss, and be expecting 1:2 trade. You can see take profit. If that is how we normally trade a break. If third touch got weak, you can see it is third touch that got weak at this point. We not enter, we not just jump in at this point. Even if we jump in at this point exactly at this top where the candle close, you can see our stop loss is going to be wider. You can see, because we are going to be setting stop loss based on the recent low we have. You can see we cannot grab anything. So that is the reason why we wait for this retest. As we wait for this retest now, you can see it gives us a good entry and it gives us a zone to set our stop loss to. So that is how I used to trade the breaks. But for the fourth touch, if it is the fourth touch that got break, we are going to be entering exactly. And most times fourth touch might also occur with this long candle. If fourth touch also occur with this long candle, we wait for the retest. So our stop loss can be little. So that is how I trade it. So I will switch back to face camera now. The most strategic aspect that I need to take note about is this trend line breaks. But the aspect of trend line touch, we are just going to focus on the third touch to trade it. So let me switch back to face camera and explain the rule. You can see at this point that at this point now we have the first. This is what I'm. You have the this is double bottom at this point. We have M pattern, so we can also execute some trade at this point. So this is what I'm going to be explaining in some series of this video, as I've stated earlier. Let me switch back to face camera and do conclusion of this video and explain the rule normal. Alright guys, this is the conclusion part of this video. In this video now, I've been able to explain to you on the chart the reason behind trend line touch and trend line bars. I already explained about two concepts of trend line in this video, which is trend line bounce or touches, and I explained about trend line break. Let me now briefly explain it in details now. For the trend line bounce, we must have first touch, second touch, and the third touch that we have. We are going to be trading that third touch. That is for the aspect of trend line bounce. And for the aspect of trend line breaks, we are going to be expecting first touch, second touch, and if we are able to trade the third touch and we take our profit, and we are going to be expecting the fourth touch to break. And if fourth touch break, we are going to be entering instantly. And if third touch got weak, sometimes third touch might got weak, we are not going to be entering instantly. We are going to wait for the third touch to retest, as I have explained on the chart. If the third touch retest, we are going to be up in. And sometimes the fourth touch might also got bounce. If fourth touch got bounce, we are not going to be trading that one that got bounce, because it's showing that the strength is becoming more weaker. The fourth touch, we are not going to be trading it. Let me say it again. If we have the third touch, we are going to be trading it. If we have the fourth touch got weak, we are going to be trading it. And if the third touch got weak, we are not going to be entering instantly. We wait for a retest before we execute that trade. Listen to this part again to understand about the concept and the entry and exit rule of the trend line bounce and trend line break. So if you are new to the channel, don't forget to smash the subscribe button, like this video, and if you have any question, comment it below. So in my next video now, what I'm going to be emphasizing on and going to explain more now is top down analysis, historical top down analysis, where the pair began, where they began to be trading that pair, the years that it began, how it began to be moved. Maybe when it began to be moving bullish, or it's still bullish, it's still very valid for bullish, to know what to execute on your smaller time frame. So catch you up in next video, where I'm going to be explaining details about top down analysis, historical top down analysis. Bye for now.